Lee Munson, our friend, joining us to talk all about what's going on in different areas, and he's got some investment advice for us for your portfolio. Lee Munson, Chief Investment Officer at Portfolio Wealth Advisors. Great to see you, Lee.
Yeah, great being here today.
So how are you feeling with a market that seems to be coming back a little bit? I don't know what you want to call it. Was it real selling because of coronavirus? Was it selling that was needed? Is there panic or not really?
I don't see a panic. I mean, to me, I look at, say, around Columbus Day 2014 when we had the Ebola mini crisis. That's a panic. I want to see 3 or 4 big down days. I want to see 2 or 3 or 4% down. But I do think in emerging markets, you saw that yesterday, right? I mean, we're over 3-4% at some point. Emerging markets are down 5% for year to date. So I think there is a little bit of a panic there. But remember, I remember SARS, and that took 6 months to really get the market to react to it. I think we're so into the immediacy with our iPhones, attached in our, earbuds and our Apple Watches. I think we feel it fast. But I think this is just like a little pause for, post earnings, and earnings are doing great. So I wouldn't think much of it outside of emerging markets.
Do you think earnings can meet some of the expectations? I mean, right now people are expecting 4%, but, I'm hearing 5%, 7%, 9% in 2020. You think we can get that kind of growth?
Probably. I mean, think about last year. Look how we dropped from January of last year. We had this 8, 10, 12% expectation, and then which I thought was nuts. And then by summertime, everything is moderated. So I think if you keep in that 4% as keeping the bar, I think it's going to be easy for a lot of companies to knock that out of the ballpark. Because remember, we've sandbagged those numbers. We've brought it down so low. How can they not meet those expectations with money so loose, employment so low, credit so available? I mean, credit, business credit, it's only going up.
Do you feel a little off the cuff picking small caps, overweight small caps? They've really underperformed.
Yeah. Oh, God. I mean, think of like being a small cap, having my small cap positions last summer. I mean, it was just like watching death or something like that. But then they made a real strong comeback in the last 3 months, right? And ever since September, October, the small cap stuff has just begun, in my opinion. I think that you're going to see these run through the end of this cycle and through the trough of the next one. So remember, small caps, they really started just a few months ago in September of getting liquidity because people are concerned about the valuation of the FANG stocks. And I think that's the only Achilles heel in the S&P 500 right now is a valuation issue.
Right. Tell me about adding some money to REITs. VNQ is something that you're recommending. REITs is the place to be. Dividends. Why REITs?
Well, the first thing is you kind of look at the charts from the last 6 months. Granted, it's done very well, but it's been very mute versus the other equity, classes. The Fed's not going to be raising rates, right? And we have yield starvation going on. So why does somebody want to delve into utilities, these old world, dead, dying fossil fuels, coal, solar? It's just a big mess. REITs are nice and pure. There's a shortage of real estate in general. It pays, over twice a dividend of a 10-year treasury. You tell me, if you had $1 to invest right now, and you're nervous about the valuation of the S&P, wouldn't you rather get 3.25%, 3.3% over the next 5 to 10 years? You don't think commercial real estate's going to stay high? You don't think with credit so loose and so many people employed, the REITs are just going to implode from here? I think that they are going to go the next leg up this year. And that's what my more mathematical models are also suggesting the same thing. So my gut instinct and the spreadsheets, when they match, that's when I giddy up.
Yeah, and that's why we bring you on, a Chief Investment Officer, Lee Munson, to answer those types of questions. Last but not least, you have some ideas for emerging markets. You have 2 ideas, EEM, which is a very popular ETF. That's a big one. VWO is another. Tell me about emerging markets and what kind of allocation I should have into that.
We have, of our stock side, so of people's stock side, We currently have 20% allocated to emerging markets. EEM is the big one that people trade, has a lot of liquidity, very tight spreads. If you're a longer term investor and looking for the lowest, say, expense charge, VWO from Vanguard, I like that. It also includes South Korea. Remember, for all you traders out there, the differences has to do with whether that index has South Korea or not. That's a difference between those two. Just an inside baseball comment there for the traders. But ultimately, I think emerging markets, they're cheap, they're profitable, they're unstoppable. Most of your purchase power parity in this planet is coming from those countries. And it's down 5% for the year. I'm just telling you, if we see another leg down on the virus and we see it down 10, 15%, which could happen in a couple days, I would be in there adding, initiating, do whatever you need to do. But I would be overweight in emerging markets right now. And I think 20% is a good amount for the average investor to have. And that's what we do for our clients. And I think it's good enough for the viewers.
Thank you for all the advice for how much you should actually put in, advice for traders. Lee Munson, we love when you're on. Thank you so much. Lee Munson, Chief Investment Officer at Portfolio Wealth Advisors. Thanks for joining us on the show.